So here's a question for you. How can one of the most dominant software companies on the planet, a true pioneer, be having its best year ever financially, but a totally terrible year on the stock market? It doesn't make sense, right? Well, today we're going to dive right into that. We're unpacking the great Adobe paradox.
And this number right here, this is at the very heart of the story. Year to date, Adobe's stock is down a whopping 27%. Now, for a tech giant this big, that is a massive drop. And you can bet it has investors asking some pretty serious questions.
And this is where it gets really weird. The business itself, it's stronger than ever. We're talking all-time record earnings, record cash flow. Things are great. But the stock, it's telling the complete opposite story. It's this huge disconnect that, on the surface, just makes no sense at all.
Okay, so to really get what's going on here, we have to explore this fundamental conflict, this paradox, between what the company is actually doing and what the market thinks it's doing.
And here is the absolute key to the whole thing. You have to remember that Wall Street is basically a time machine. It's always looking forward. It cares way less about today's report card, where, by the way, Adobe is getting straight A's, and way more about the final exam, The fear of what might happen tomorrow is completely drowning out the reality of how well the company is crushing it today. But look, before we get into all those fears, let's just take a minute and build the bull case for Adobe. Let's look at the hard numbers, the history, that show why, by any traditional measure, this company is an absolute powerhouse.
You gotta remember, Adobe has been around the block. They were a true pioneer, completely changing the game by shifting from selling software in a box to the software as a service model that, let's be honest, everyone uses now. They bundled titans like Photoshop and Premiere Pro into the Creative Cloud, and boom, they created a subscription juggernaut that, by the late 2010s, was just a high-margin cash machine.
And those moves paid off, big time. We're not just talking good numbers here. We're talking all-time high earnings, all-time high free cash flow, and on top of all that, an exceptionally strong balance sheet with almost no debt. These are the incredible fundamentals that the market seems to be completely ignoring right now.
So what does a company like Adobe do with all that cash? Well, a massive chunk of it goes right back into buying its own stock. This is a huge sign of confidence from management, and they are incredibly aggressive about it. Even more so than a company like Apple, which is already famous for its buyback program.
And what's the results of all that buying? Well, over just the last 5 years, Adobe has shrunk its total number of shares by over 12%. That means every single share that's left represents a slightly bigger piece of this super profitable company.
And here's the real kicker. Even with all this strength, the stock is trading at its cheapest valuation in more than a decade. If you look at its forward price-to-earnings ratio, which is just a fancy way of saying how much you're paying for future profits, it's at a steep discount to the market average. By this measure, Adobe looks less like a high-flying tech stock and more like a deep value bargain.
So, okay, we've got a financial fortress that's trading for cheap, which brings us to the other side of the coin, the bear case, the one massive, single fear that's casting this huge shadow over everything else: artificial intelligence.
It's a fair question, right? If the business is a cash-generating machine and the stock is on sale, what on earth could be causing a 27% drop? What are investors so spooked about?
And there it is, plain and simple. This is the absolute core of all the negative feelings out there. The fear isn't about what Adobe is today. It's about a potential future where Adobe might not be the undisputed king of creative tools anymore.
So generative AI, this is the tech that can create brand new stuff. Images, videos, text, from just a simple prompt. And the big concern is that these new tools, which are often cheaper or even free, could start to chip away at Adobe's competitive moat. They can make it so easy for anyone to create great-looking content that you might not need Adobe's powerful, complex software anymore.
Now, this kind of story, this fear-driven narrative, it's not exactly new in the tech world. In fact, you know what? We have seen this exact same pattern play out with other giants. Let's look at a couple of recent examples.
This is almost a carbon copy of what happened to Apple and Alphabet not too long ago. The market hammered Apple over fears of slow growth and weak iPhone demand. It punished Alphabet over fears that AI chatbots would completely destroy its search business. In all three cases, the story was the same. Their competitive edge was disappearing.
But here's the thing. Both Apple and Alphabet proved all the doubters wrong.
Apple shut down the critics by showing just how resilient its ecosystem is, and Alphabet successfully baked AI right into its core search product. Now, of course, past performance is no guarantee of future results, but it shows there's a clear precedent for the market getting way too pessimistic, creating what later turned out to be a huge buying opportunity.
And that brings us right here, to the moment of truth. This is where the strong value case slams right into the very real risk posed by AI, and it forces us to ask, what happens next?
So here's the tale of the tape. In one corner, you've got this compelling value case: record earnings, a rock-bottom valuation, massive share buybacks. And in the other corner, you have the AI risk, the potential for that competitive moat to dry up, and the overwhelmingly negative feeling from the market that goes with it.
So the path forward for Adobe seems pretty clear, and it's basically a two-step plan. First, they have to weave powerful AI tools into the products everyone already uses. But second, and this is the most important part, they have to actually make money from them. They have to prove that AI is a revenue driver, not a business killer.
Because, let's be real, the market is done with promises. Big talk and confident speeches on earnings calls just aren't going to cut it anymore. Investors need to see the proof. They need cold, hard, measurable data that shows how Adobe is actually turning its AI strategy into cash. And that all brings us to one single, crucial date: December 10th. That's the day of Adobe's next earnings report. And believe me, Wall Street is framing this as the moment of truth for the company's entire AI story. So the big question for the market is, will this be the day we finally get the proof we've all been waiting for? Or will the shadow of AI just keep getting longer?